Joining us live, Peter Switzer, the founder of the Switzer Report, of course. What is spooking the markets right now, Pete? We saw a fair bit of damage last week. I mean, is this just all the part and parcel of things at this time of the year, or is it something more sinister than that?
Well, it is seasonal, Peter. August and September aren't great months for the stock market, but you've got China with property problems. Evergrande has basically gone in for a debt protection position in the US. The Fed is still pretty trigger happy when it comes to rates. We've seen rising bond yields, and part of that's because the US economy is not looking all that slow at the moment. So you put it all together, there's a good reason for a lot of profit takers to get in there and take profits. You know, the NASDAQ is up something like 28% this year. Our market's only up 3%, and the loss over the last month or so has been about 2%. So what you're seeing is a lot of negativity, which could easily turn into positivity. And the positivity would come from the fact that, well, most people think that a recession isn't likely in the US. Interest rates are likely to be cut in 2024. Company reporting's been a lot better than expected. And I think also there's a belief that recession is really low on the priority of concerns. Put it all together, I'm going to take the Imran Khan approach to the markets, Pete. Yeah. I'm going to be ready to pounce like a tiger.
Buy the lows. Is that what you mean?
Exactly right. Remember, Imran Khan always said he would pounce like a tiger, and I think there's going to be an opportunity. I'm not going to go with it yet, but I still think
I was going to ask you what lows you're buying.
I'll tell you when.
You text me later.
Yeah, well.
Okay, what are the big watches this week then?
Yeah, PMIs right across the world are going to be really important. But also that famous Jackson Hole meeting where a whole lot of central bankers get together. This is probably a really important one because central bankers do control our attitude towards interest rates. And so whatever comes out of that later this week will be pretty important for the market.
Just advice, I mean, for those folks who have seen, the big losses over the past couple of weeks in the stock market, Peter, is the advice just to don't panic. These things just turn around eventually.
Yeah, I think the big watch is going to be China. And the thing about China is I don't think they can afford to have their economy look like as a basket case and that Beijing itself can't rescue the economy when it has to. And I think that's going to be the important one. I'll be watching China very closely, but I think they will. They've cut interest rates already. I think they will mount a rescue program. And when that happens, I think that will take away fears of a global recession next year. And I think that will be a real turnaround. I also think the December quarter, always great for the US stock market.
So why have they been reluctant to launch that rescue program until now, Pete?
Yeah, it's just the new phase I think the Beijing leadership's going through. Yeah. This was a developing economy that could pull off 8 or 9% economic growth really easily. It's now becoming a more mature economy, and mature economies only grow at 2 to 3%. They are still growing at 4.5 or so, and they're aiming for 5. So I think it's a transitional period. I don't think they can afford to be seen as a basket case when they are the second biggest economy in the world.
Good one, Pete Switzer. Talk to you soon.